Now we turn our attention to some more movers here, and Diane King Hall, host of Morning Movers, is with us and taking a look at the solar stocks. We're seeing some action there. What's driving this?
Yeah, a lot of them were under pressure this morning. This off the back of the big, beautiful bill. So that's creating some turbulence within the solar sector there. You had some under pressure. Some have turned higher now. And again, keep in mind, some of these stocks have been under significant pressure this year off the back of this bill. So Enphase is still under pressure. Some of this comes because the Senate version of the bill would accelerate the end of the tax credits for solar and wind projects. The Senate version of the bill says that those credits would only be provided if they're completed by 2027 rather than starting that work by then. Completed by 2027. It gives incentives for nuclear power. That's where the incentives are in the bill. So there's some pressure on Enphase still. NextEra Energy under some pressure as well. And keep in mind, Enphase has been under a lot of pressure year to date. That stock is down more than 40% year to date. NextEra is still down. It is off by 4% year to date, but is under pressure today. A bigger hit there. Sunrun has flipped positive, but still under pressure year to date. Sunrun down more than 10% year to date. First Solar is also in focus this morning. First Solar is higher, but it is under pressure year to date. Again, once again, tied to this bill. This is how Oppenheimer views this. The big concern for the industry, again, is this new deadline, especially when it comes to completing these solar projects. He says, quote, given construction timelines for many power projects, we believe this provision would lead to a slowing of utility-scale solar project deployment by early 2026 as developers manage construction risk and renegotiate power purchase agreement prices. So in terms of why First Solar is higher, I had to check in with our brain trust KG ahead of this because I'm like, what's going on? Why is First Solar higher? Why is Sunrun turning positive? He pointed out that, of course, that First Solar manufactures in the U.S. So that's helpful when you look at some of the details within the big, beautiful bill. And then he points out that Sunrun can make money from power purchase agreements, Nicole.
Yeah, and as you noted, also the draft bill that would phase out the tax credits and up these projects by the end of 2027. But you are seeing First Solar and Sunrun just catching a bit of a, I think Sunrun was on one of the ones that have an up arrow. So the group is somewhat mixed, right? Sunrun now is up 8%. So this story is, and Sunrun, the largest U.S. residential solar developer. So we'll see, what happens going forward. But for right now, it's also how much Chinese-made equipment they use. That's also part of the story here, which I don't know all the details, but that also will be factoring into which ones may do better or worse. A final thought on the group.
No, that's exactly right. What you said there about the materials, right? So with First Solar having less overseas exposure, that's helpful. Overseas exposure, that's helpful to First Solar. So even though it's still down year to date, higher today, it's more protected within the group. So it may outperform among the group. And that's why, for instance, you see Enphase still down more than 40% year to date.
Yeah, and maybe it's worth noting that Elon Musk just continues to go forward and saying, it's an outright massacre of the new and wind and solar and sort of giving the industries of the past more favorability. But obviously, the folks that are making some decisions feel differently. So that is an ongoing discussion. And we know that Trump and Elon Musk are friendly these days. What about Disney?
Disney moving higher this morning. This is off the back of a more bullish viewpoint. This is over there at Jefferies. Jefferies is upgrading Disney to a buy from a hold, so they still see magic in the Mouse House. They've got a new price target of $144 a share. So that signals some upside from here for Disney shares right now. Again, higher by a little more than 1%, but keep in mind Disney recently hit a new 52-week high, so it's had some momentum this year. This is where Jefferies sees the catalyst here. The cruise business, they see that as the catalyst. There's the launch of 2 new Disney cruise ships. Those are set for early 2026. They see that as a major revenue driver here. That's expected to bring in $1 to $1.5 billion in incremental revenue. It's not just about the cruises. It's diverse strength here, streaming and content strength. Disney Plus has had significant growth year over year. They point out that it's had 40% year-over-year growth in web traffic for 3 consecutive months. And then you also have the actual content. It's not just about, what the numbers look like for demand. They see key titles fueling the engagement. So you've got Moana 2. You've got you've got Zootopia 2 coming out. I love the first version of Zootopia. And then you have Avatar 3 that has certainly big fans of that. And then they also point out the new ESPN streaming service, again, as a catalyst, is seeing strength in Disney's strategy when it comes to both bundling, original content, and live sports. So really firing on all cylinders when it comes to how they're approaching, reshifting. And, we've been watching Bob Iger shift that story of Disney, the challenges it had during the pandemic, and seeing that turnaround now. And it's not just about, again, cruises and content. Advertising and partnerships, they see that as a catalyst as well. They point out that Amazon partnership, adding that advertising boost there, and they expect that to expand margins and scales. And of course, you can't forget about the theme parks, Nicole. Those are a big boost in the from the point of view of Jefferies here.
What a nice chart that is. Look at that comeback from that dip, and you think about whether or not people will be spending. And we've been talking about the cruise lines and the, skiing, like MTN and Six Flags, and people can spend anywhere, right? The gambling and such. But this, obviously, they have multiple revenue streams. It's not just one thing. It's not just theme parks, or it's not just. So they have these different multiple revenue streams, which probably works in their favor.
It does. And then overall, now where you're seeing, how analysts and sell-side community is seeing Disney, you have more analysts than not who are in the bullish community. You have more than 24 analysts who rate it as a buy or a strong buy. So it certainly has some favorability when it comes to bullish sentiment around it. And it seems to just, it's regained some of that allure and magic that was around it.
All right. And next up, last but not least, I was talking about some of these financials and how well they're doing, and a lot of optimism about more deals and things going forward for them. And we did see Goldman Sachs get a price target hike.
Yeah, that's right. So RBC Capital is boosting its price target on Goldman. It's boosting it to 700 from 560. Now, look, they are maintaining sector perform rating, so they still have it, on the sidelines, but they certainly see some room here from where they previously had their price target. Look, that is, to be fair, that is around the level where it is now. And in terms of how the street is viewing Goldman, it's a pretty mixed picture. You have, it's pretty split evenly between neutral to bullish on Goldman. So this kinds of lines up with the views on this. But overall, financials have been doing well. We look at XLF, that's been higher. That's the index that measures across the group. But again, JP Morgan Chase has been doing well. I know we're going through the list there this year. And Goldman, it's got a gain today, but it is up more than 20% year to date, so it's outperforming the S&P 500.
Okay, and any final thoughts just on the big picture as we're hitting new record highs? We talk about Goldman hitting a new high, so many new highs.
I know. First of all, I love that you wore green today. It lines up with what we're seeing, all the green on the board today, and not surprised to see these records that we're hitting today, especially given the way momentum is going. But again, I took note of what KG said. Because it's the end of the quarter, you kind of have to be nimble with a day like today.
All right, Diane King Hall, great to see you.
Good to be with you.
Thank you. And a lot of names hitting new highs, and the market breadth. We were talking about almost half of the stocks that had started off in the green, and now I'm seeing more than half on these sectors. If you remember, I said the sectors were showing some red, but now I'm seeing more green.